Welcome to this explainer. Look, if you've ever felt completely overwhelmed by the sheer volume of tax codes, trust me, you are not alone. It's a lot. But today, we're unpacking the new Income Tax Act 2025, and I want you to look at it differently. Think of this new act not as some dense, intimidating legal document, but as a literal blueprint for building your personal tax profile. We're going to construct your understanding right from the ground up. Okay, let's dive into this. The government has undertaken a massive project with the newly introduced Income Tax Act 2025. This whole thing is entirely about tearing down those confusing, convoluted legal structures of the past and building something highly accessible and, well, logical for everyday taxpayers like you and me.
Here is our roadmap for this explainer. 1. A blueprint for simplification. 2. The unified tax year. 3. Determining your residential status. 4. The 5 heads of income. And 5. Deductions and exemptions.
Section 1. A blueprint for simplification. Rebuilding the foundation. The foreword of the Act actually states this mission crystal clear. A comprehensive review of the Income Tax Act 1961 to make the income tax law concise, lucid, and easy to understand. The drafters deliberately ditched the complex, winding exceptions of the past. Why does this matter? Because when the law is lucid, you actually have the power to make informed financial decisions. It's a total game changer.
Moving to Section 2, the unified tax year. Setting the timeline.
The Act defines the tax year as the 12-month period of the financial year commencing on the 1st of April. Now, I know it sounds incredibly basic, but mastering this simple concept first builds your confidence for the rest of this explainer. Every single rule, every deduction, and every income head we're going to discuss operates strictly on this exact unified 12-month clock.
Let's move to Section 3 and see how this builds. Determining your residential status. Where do you belong?
So if you're wondering about your status, the Act provides a basic two-step flowchart. Step 1, if you are in India for 182 days or more in the tax year, boom, you are a resident. It's really that simple. But, what if you aren't? Then we look at Step 2. If you are in India for 60 or more days this year, and you have been in India for 365 or more days in the prior 4 years, you're also considered a resident. It's just a very straightforward mathematical physical presence test.
Now, what's really interesting about this slide is the fascinating exception to that physical presence rule. It's called the deemed resident. So if you're an Indian citizen and you aren't liable to pay tax in any other country because of your domicile rules there, you are deemed a resident of India for tax purposes, and that's regardless of your day count. It's a clever catch-all built right into the new foundation.
Section 4. The 5 heads of income. The pillars of your profile. Think of it like this. Every single rupee you earn systematically sorts into one of 5 pillars. Pillar 1 is salaries. Pillar 2 is house property. Pillar 3 is business or profession. Pillar 4 is capital gains. And Pillar 5 is other sources. Whether you sell a house, maybe freelance as a designer, or even win money in a card game, the 2025 blueprint has a specific room designed to hold it.
Let's quickly unpack that first pillar. Salaries. The Act is incredibly thorough right here. It covers your standard daily or monthly wages, obviously, but it also includes any annuity or retirement pension. Crucially, it captures advance salary paid before it's actually due to you, as well as arrears of salary from an earlier tax year that you're just receiving right now. Basically, if it stems from an employer-employee relationship, it lives right here in this pillar. So the crucial point is, when we move to the second pillar, house property, which deals with rental income, the 2025 Act allows a flat 30% standard deduction on your property's annual value. This is huge. It means before any tax math is even done, you just shave 30% right off the top. It's a built-in buffer to account for general maintenance and repairs. But, well, looking at the house property pillar naturally leads to a highly relatable question for a lot of us. What about a home you actually live in? You certainly aren't earning rental income from just sitting on your own living room couch. The 2025 Act provides clear, super practical relief here. The annual value is considered nil, zero, for up to 2 self-occupied properties. This means you absolutely are not taxed on any hypothetical or notional rent for up to 2 houses that you use for your own personal residence. Now, let's jump over to the capital gains pillar. If you sell a residential asset and make a profit, you can actually avoid the capital gains tax entirely if you reinvest in a new home. Check this out. If the day you transfer the asset is day 0, you can get the exemption by purchasing a new home up to 1 year before that transfer or up to 2 years after it.
Building from scratch? The law actually gives you up to 3 years. Section 5, Deductions and Exemptions. The finishings. And this brilliantly illustrates the government's push towards digital transparency, especially in the business and profession pillar. For a business expense to be allowable as a deduction, it heavily favors online or banked payments. If you make aggregate cash payments exceeding 10,000 rupees to a single person in a single day, that entire expenditure is disallowed. No exceptions. It's a strict line designed to keep the ecosystem clean and traceable. Bringing this full circle, everything we've looked at today is a simplified structure designed for basic return filing compliance. We've traced the unified timeline, mapped out your residency status, erected the 5 pillars of income, and applied your deductions. Ultimately, all of these neatly sorted pillars flow directly into the default new tax regime slabs to cleanly calculate exactly what you owe. It all ties perfectly back to that original goal, making the law concise, lucid, and incredibly taxpayer-friendly. The structure of the tax system is clearer now than it has ever been, and you finally have the blueprint to navigate it. So I'm going to leave you with this thought. How will you use this knowledge to build a stronger, more compliant financial foundation under the 2025 Act? The tools are right there in your hands. Thank you so much for joining me for this explainer.